leave the farm when I was 15. Too many miles for what we had, and I'm bumming my way to the coast. Things out there were just as bad.
Tom, thanks for coming.
Extension agents and other service providers are often called by farmers to weigh in on the question of why am I not making money? Those farmers have their agronomy and other parts of their business down pat, but they just don't seem to be able to make money. We're going to talk about what a service provider would do on a vegetable farm to address that problem. All farms have to have a Schedule F in order to pay their taxes. The Schedule F may be the only accounting system that you come upon when you go on one of these farms. If you're lucky, the farmers have gone further and have more data and have employed a tool that we'll talk about later, something called Veggie Compass. But the chances are slim of that. So you're going to be working with something resembling Schedule F. But before we go down that path, let's take a look at the characteristics of the type of farm that I'm talking about. These are multi-crop farms, maybe 40 to 50, 60 different crops is very, very typical. Selling through multiple channels to get to their customers. They could be selling direct to consumers at a farmer's market or through a CSA or a road stand. They could be selling to restaurants. They could be selling to retail stores, and certainly selling to wholesalers and other middlemen, including food hubs. So it's rather complex. They do, however, have the ability to set prices. They may be aware, but for sure, they have a very high labor content to their cost. And they probably have more investment in facilities and equipment than they do in land. This is not a land-hungry activity. But for sure, like other farmers, their accounting systems are generally aimed at the ability to pay taxes and not using the information to make management decisions. In order to assist these farmers, there has to be some method in your mind as you walk onto the farms. And the method that we're going to demonstrate in the webinar today is taking whatever financial records they have and restating them in a way so that they end up in manageable, logical units. Then compare these results to the farmer's goals for profitability. Make sure that these goals fit with what is attainable. That is, maybe look at some benchmarks. And then interact with the farmer to bring the expectations in line with something that is actually achievable. Then discuss management changes that the farmer can make to change the outcomes of the units on his farm or her farm, and suggest improvements to what data the farmer should be accumulating so that the next time you visit them, they'll have more granularity to their activity. So if we take a closer look at Schedule F, it could be a starting point with some manipulation. And the webinar will show how to manipulate to make it a more management-friendly set of data. But basically, the Schedule F, as I said, is designed to give a number against which the farmer pays tax.
Things out there were just as bad.
Tom, thanks for coming.
No problem. You said you wanted to talk about your operation a little bit?
Yeah, end of another season and better sales than ever this year.
Good.
But, not much in the pocket to
That's
show
not
for
so
it.
good. Well, we can get to the bottom of that. I think the place to start is kind of looking at some of your financials. Give me a little background on your operation here, though.
Well, we've got 5 acres in production now.
Okay.
We do a 90-member CSA.
Mm-hmm.
Oh, and I should say this is year 5. 90-member CSA. We do a couple markets, farmers markets,
Okay.
and then we do a small amount of wholesaler restaurants.
Mm-hmm.
And we're up to what seems like a decent amount of gross, but with all the expenses, my wife Rebecca still has to work off the farm full time. She's got a great job, but she'd like to be here on the farm, and I still have to work a little bit in the winter to make ends meet. So the farm's not really supplying cash to the household yet. And
Well, I think the place to start is to see if there's potential for the farm to make profit. And the only way to look at that is to look at what your record has been. And then we can kind of see if there are some problems we can uncover or some opportunities to take advantage of.
Okay. Well, Becca does the books for me.
That's
uses
good.
QuickBooks, so
That's great. I mean, we could even use Schedule F if you want.
okay.
Schedule F's a little gross in some of the categories, but if you have QuickBooks, let's take a look at them.
Okay. Well, let's go in the house. I can
Okay.
show you last year's profit and loss.
Great.
So, last year's profit and loss.
Okay. So the thing about Schedules F and anything that looks like Schedule F that an accountant has made for you, it's driven by they're wanting to make sure that you've got the right income tax documents.
Okay.
But they're hard to manage. So what I'm going to do is take the accounts as they are right here, and we're going to divide out all the expenses into 3 categories. One category is going to be production costs, which are more or less variable with volume. Another category is going to be the cost of selling at the market, in web pages and so forth, which are sort of fixed and sort of variable. And then there's some expenses that even if you didn't grow 1 turnip, you'd still have those expenses. And so
you mean overhead?
Overhead, exactly. And they're fixed. So we're going to make columns, and this one is going to be called production cost, and this one is going to be called sales and marketing, and this one's going to be called, we'll use your word, I like it, overhead. And we're going to take each of these expenses and work down through, and you can tell me where you think each of these belong. Some are obvious. For instance, you've got fertilizer and lime.
Okay, that's production.
Production. So we'll just take the number across and put it in the production column. Another obvious one would be seeds and plants.
It's down here.
Down here, and that one we're going to put right straight across. Make sense?
Yep.
But now there's some that are a little more difficult. For instance, gas, fuel, and oil. Where do you think that?
That's production.
Well, how about going to market?
Oh, sure, right.
So some of this, and now I'm gonna force you to make some decisions about how much of that might be in the production area, how much of it might be in sales and marketing, but overhead too. Going to the hardware to get some bolts or supplies or something like that. So we need to divide that into a piece into each of the 3 columns.
Okay. I guess I would say it's probably, I guess as a rough guess, fine, or do I need to?
A rough guess is good enough for what we're doing right now.
Okay. I guess off the top of my head, I'd say probably a third in each of those categories.
That works out pretty good. So now we're going to go through the rest of these sort of with a similar methodology, and if we have to guess, it's better than nothing.
Okay.
If you're lucky, the farmer will have an accounting system that feeds his Schedule F. Often, this is something like QuickBooks, QuickBooks for Farms. But even when those systems are set up, they are not set up with the idea that they will provide good management information. And so we still have to work through that. And in fact, the example that we're going to show you is of a farm that does have such a QuickBooks setup. So Anthony, what we've done here is we've added up all the numbers that you ascribe to production, sales and marketing, and overhead, and we've got totals.
Okay.
But there is one thing missing, and that is that there's no accounting for the time that you've spent on the farm. So I know this is going to be tough, but I want to ask you about how much do you think you've personally have earned out of work on the farm, and how have you spent your time?
Well, I guess out of the total there of 17,500, calls maybe $10,000
Okay.
went to me. So, well, if you calculated my hours, it wouldn't be very much in terms of an hourly wage. I can tell you that.
And how was it divided between production, sales, and then just general and administrative overhead?
Most of the time it feels like 100% is out in the field, but obviously spend other time as well. I guess we could say 60% in production.
Okay. That's pretty easy math for me. I've got it. And sales and marketing?
And overhead, I guess maybe even each, so 20 and 20.
20 and 20, okay. Okay. I can do most of this in my head. 47,600, 5,600, 10,100. Now let me tell you why I wanted you to put this in. A lot of the benchmarking data that we've been able to get from various sources usually has the owner's salary or some kind of compensation for the owner in it. So to compare your farm with those farms, we really needed to put it in here.
Okay.
So now we've got it. So there are the totals.
All right, well, I guess I'm interested, but I don't quite understand how this helps me yet.
Okay, and that's the good question, because that's where we need to go next. And what I'd like to do is I have a format that begins to put this in a form where we can make these comparisons that I'm talking about. And so the form is simply a very high-level profit and loss statement of your farm. So we just take numbers that we've generated here, and we start out putting in your sales number, which was 70,000.
Right.
And then from the work we just did, let's put in cost of production, 47,600. And we're going to take the cost of production away from the sales number to arrive at a number which we'll call gross profit. And so that's 70,000 minus 47,600.
22,400.
Okay. And then we have sales and marketing of 5,600, and we have overhead of 10,100. And so what we need to do is take both of those expenses away from the gross profit.
Okay, so
So it's 22,400
minus
minus 5,600 and minus 10,100.
6,700.
6,700. Okay. Now what we're going to do is take all of these numbers as a percentage of sales. So the cost of production was 47,600,
So
and divide it by 70,000.
I see.
Which is your sales number.
So as a percent, that's 68%.
68%. Okay, and so 68% away from the 100% of sales means that you had a gross profit rate of 32%.
Okay.
Now, sales and marketing as a percentage of sales, $5,600 divided by 70,000.
8%.
Okay. And general and administrative, 10,100 divided by 70,000.
14%.
Okay. And so net profit after all those expenses was $6,700 divided by 70,000.
9.5%, 10, somewhere.
And that makes sense because you had 32% gross margin, minus 8% sales, minus 14% general and administrative, and so it's about 10%.
Okay.
Okay. Now what we're going to do is put in some numbers of average farms that we've collected data from in exactly the same format and see how the comparison goes. So what we've shown in the video is the service provider working with the farmer to take the QuickBooks list of accounts and put them into these manageable units. The unit of sales, the unit of the cost of production, the unit of sales and administrative, which has no necessary bearing on the amount that is sold, and so it looks like overhead, and then pure overhead, administrative. Be careful, and we were in this example, to include some quantification of the owner's own labor in the rack-up. So after we've done our scribbling on his account pad, we've taken that data and simplified it into these major areas of management capability: sales, cost of sales, gross margin, sales and marketing expense, administration or overhead expense, and then net profit. Now we can begin to compare data from other farms, and we can also begin to point the farmer at the areas, be they price, sales volume, or cost, where he can do some things to change the results. I've put down some benchmark numbers that correspond to the way that we've reconfigured your numbers.
Okay.
Now, before we get into it, I have to tell you that in the world of vegetable production, the distance from the top to the bottom is quite broad. And the number of benchmarked farms that we have in vegetables is rather small compared, let's say, to corn production or soybean production, where you have hundreds of farms reporting. So we have to take it a little bit with a grain of salt. But there are some trends that pop out here. One is that the way we've calculated it, your gross profit level is 32%, but on these farms that we've looked at, that's more like 42%. And so there's a margin difference.
Okay.
And the margin is composed of two things. One is the price that you sell at, and the other is the cost that you have in production. And so we should look at each of those and with the data that you have. So let's start with a sales number. You said that you're selling at CSA. You have a CSA.
Correct. Yeah, we have 90
About
members.
90 members. And the market for CSA will dictate how much you can charge. But you have to be careful that you're comparing the same number of boxes delivered over the same number of period with roughly the same variety of vegetables in them.
Okay.
Have you done that work, let's say, on the internet or wherever you can find that information?
Yeah. There's about a dozen other farms that offer a CSA program, and in the metro area where we are marketing, and and many of them have been around for a number of years. So when we started our farm, we felt like we needed to set our price a little bit lower so that we could attract members.
Of course, now, Anthony, you've been in business for 5 years, and so it may be time to try to push that price up over, not immediately, but over the next couple, 3 years. Maybe try to have an increase of 5-10% when you go out next year, and then another time
we have been thinking about that, and we just been a little nervous because we don't want to.
No, I understand that. I mean, this is something that you might want to try. You can always back down a little bit if it doesn't work. What about the individual crops you sell at wholesale and at the market? Do you have good data on the sales of those crops?
The price that we get for each of them? Well, certainly for the small amount of wholesaling to restaurants, because we've got invoicing, and so we've got that information.
Right.
At market, I don't have good records. Through the season, what I'm selling on a week-to-week basis changes, and the price can change based on the time of the year. So I guess if I had to, I could come up with an average price, maybe, but it.
Well, I think that's an area that you might want to devote some record keeping to. There's some systems that you can use, but the biggest thing is just to make a record of it at market. And I know that's tough because market can get pretty hectic, but I think there's ways to do it, and we can talk about that, or you can talk to other growers about how to do that. Once you know some of those prices, then you can compare it to other people selling at market, making sure that you're comparing apples to apples. That is, if you're organic and somebody else isn't organic, that might give you some price advantage.
Sure.
So getting some data next year, I think, is pretty important.
All right.
So we've taken a look at your top line, and you've got some things that you could work on for next year that might improve the top line. But we also need to talk about the cost of production on your farm. And this is going to be difficult without better records. I think we've talked about that before. But for sure, if you look at the total cost, there are two buckets of cost. One is the cost to grow something. And you pretty much make the decisions about the input costs up front. Yield is very important, because you divide the number of things you grow by the cost, and that's, or the cost by the number of things you grow. The more you grow, the lower the cost is going to be. And so you should work on yield. I'm not an agronomist, but you should reach out to those kind of people. In harvest and pack, the cost works differently in harvest and pack. It is truly variable. If you don't harvest and pack, you don't spend money. But in any case, in both growing and in harvest and pack, labor is a very high component.
Oh, sure is. I get scared when I look at the payroll numbers in the profit and loss statement.
And of the two, harvest and pack tends to be a little higher on most farms. And so looking forward, if you could start keeping data, at least on the labor used to harvest and pack, you begin to get a feel for where you may be able to be more efficient. And that is the way to lower the cost, is to try to be more efficient, have better tools, better procedures in the packing shed, and so forth.
I see.
So with the data we have, we can't really dig any deeper into the cost of production until you get some more data. If you can get more data, one of the reasons to do it is not just to celebrate having data, but to use it in some programs that'll give you a better idea of what each individual crop costs for you to produce. Then you can make better informed pricing decisions. Sure. There is a product that called Veggie Compass that is on the web. You can get it at veggiecompass.com or through the Southern SAWG webpage, which links to the Veggie Compass.
Okay.
And And if you have labor data, you can start using that product to kind of zero in on individual crop costs.
So does it cost anything?
It's free. It's free for use. You can download it as it's an Excel spreadsheet that you can download off the internet.
So it's a spreadsheet that I start plugging the
Sales,
numbers
a lot of the stuff that we've already talked about. Sales data by crop, and some of the labor data that you start accumulating going forward here. Veggie Compass takes all of the expenses that we've just looked at on your farm and uses a procedure very similar to what we've just used, dividing out all those expenses into the various categories, and then rolls it back up into a much more detailed view of what we've just done.
Well, that sounds great.
We talked earlier about the tool Veggie Compass. Veggie Compass takes each of these major headings of management capability and breaks it even further down. We'll show you some of the details of that, but Veggie Compass can be found on the Southern SAWG webpage or directly on the Veggie Compass webpage, which is maintained by the University of Wisconsin. Veggie Compass takes key inputs that require data collection, but turns them into very powerful information outputs that the farmer can use to improve profitability. The inputs are farm expenses, which are an echo of what is on Schedule F, farm sales for all crops, growing areas used by each crop, crop-specific expenses, number of plants that go through the greenhouse if they have a greenhouse, total greenhouse labor hours, and this is the big one, labor hours by crop, both for field growing and for harvest and pack, and labor hours that are not specific to a crop. Those are the inputs. The outputs are the cost of a crop up to the time it can be harvested, the total cost of a crop through harvest and packing, cost to produce each crop in dollars per pound, dollars per bushel, dollars per unit, if you will, and what the break-even price should be for each crop, total labor costs by crop, and finally, gross margin and net profit for each of the sales channels that into which the crop is sold and in total. So going through these without going into great detail, the input page looks like this. It lists all the expenses that the person may have in their accounting system or if they don't have an accounting system on Schedule F, and then divided across the activities, and I won't define each of them, but divided across the activities of the farm. The second step of input is sales input, and here the farmer records the sales of each of the crops in each of the channels, both in dollars and in the units of measure. The final step of input is in the labor input to all phases of the activity dealing with production, including the crop-specific activities, the non-crop-specific activities, greenhouse, and so forth. The outputs then show detail for each crop of the cost of the various stages of production all the way out to harvest, pick, and pack. The sales output page then takes the general sales data that was input in the second phase and matches it with cost and shows the profitability of each crop in each channel. And then finally, in output, we roll all of this detail up into a summary of the farm showing sales, gross margin, marketing cost, and an allocation of overheads to each of the sales channel that the farm operates in.
You know, I've thought about trying to track labor on my farm, but it just seems impossible to get, labor data by crop. And then do I also need to track it by the different markets that I'm selling in as well?
That's right. There are some tools that you can use to make this a lot simpler. A couple of them are simply procedural. If you probably get time cards from your employees right now.
Sure, they record
And
how many hours they work.
And so all you'd have to do is ask them to also record what they're working on. So that time card could become a record. Another thing to do would be to have a whiteboard in your packing shed for your own labor and for their labor to, again, record what they've spent time on that day. I think the main thing on this is to make it part of the routine so that every day it's just known at the end of the day you record what you've worked on and what they've worked on.
Okay.
There are some forms on the Veggie Compass website or the Southern SAWG website some paper forms that could be used.
Okay.
And we have a link on there to some other record-keeping, basically technologies, using iPads and even smartphones to record data out in the field and then transferring it to some spreadsheet programs.
Oh, well, that would be great. I'm practically physically attached to my smartphone. So
There you go. So we've talked about profitability benchmarks, but in this area of production, there are some benchmarks from other farms about how many sales they've made per acre actually under cultivation. There's a study that's about 10 years old that would say that farms your size should be shipping about $15,000 worth of produce per acre. If you take into account inflation and how things have gone in the market, today that could be $20,000. And indeed, there are farms that are shipping about $20,000 per acre. You're at...
Well, if we do the math on mine, I'm at $14,000 an acre, so
14.
I'm not there yet.
Well, I go back to the issue of yield and the possibility that you could extend your season. Yeah, I saw some hoop houses when I came in. Certainly that would increase the amount of sales that you have per acre of actual cultivation.
Yeah, we're really optimistic about what that's going to contribute to the bottom line. We've got the one hoop house, and if it goes well, we may put up another two. It also seems to me you were suggesting I raise my CSA and maybe some of my farmers market prices.
That'll increase the dollars per sale. That's right, at the current yield even. And then if you increase yield, that would even be greater. One of the issues you'll run into is what is a good goal? In this type of agriculture, there currently is very little benchmarking, but there are some data points. One that we point to frequently is old data, but it can be used as a surrogate. It was data that comes from 2002 to 2004, collected on 23 to 24 farms by the University of Wisconsin. That data shows the average gross sales per acre for farms of different sizes and the range of those sales for those farms, the average labor hours expended on those farms per acre and the range, the return that was actually achieved to owner labor, management, and capital per acre in the various size farms, and a range. There's huge variability in this. There's variability between farms because of methods, because of the markets they sell into. There's variability, obviously, between years when weather can have a dramatic effect on pests, on yields, and so forth. There's a variation in the crops that are grown. And a variation in which channels the farms elect to sell through. Some more recent data that has been collected was done by the Farm Credit Council in conjunction with a private purveyor of information. It covers, however, only 12 or 13 farms, but it mirrors the work that was done earlier. It shows net profit per acre. It shows the gross margin that was attained across these farms, the total cost of labor, and the total cost of other crop inputs. So this is another data set in this field where there aren't a lot of data.
Well, one of the things that it shows me, though, that if the most I could make is 20,000 per acre, at the scale I'm at right now, that only means $100,000 gross, and with, maybe I can get a little bit more efficient and decrease my cost of production, but it doesn't seem like it's going to be possible at this scale maybe it'll be possible for me to quit my winter job, but Rebecca would really like to be full-time on the farm, and it doesn't seem possible at this scale for her to work off the farm or not have to work off the farm. I feel like we probably have to double in size.
Well,
in sales.
One thing I'd like you to consider is if you go back to the profitability benchmarks, if you could get your profitability, that is especially the gross profit percentage, up to what other farms are doing, or even greater if you had the hoop house hooped up, you could have, through profitability only, not by grazing more, but just being more profitable, you might be able to get your goal. And I think you should concentrate on that first, then think about expansion to more volume.
Okay.
I think there's a lot that can be gained by that approach.
Well, Tom, I feel like this is giving me a lot to think about, and perhaps a path forward.
Well, good. You have to realize that, and I'm sure you do realize, that you have a very complex business. You're raising 50 different crops. You're selling into 3 different market channels. To manage it, you have to get your arms wrapped around some of the details of that. And with some modicum of data collection and using some of the tools we've talked about, that's the purpose of trying to get some information that then you can start making better management decisions about. And I do believe that working on your profitability here in the coming season is probably the place to start, and on record keeping, better sales records, and start figuring out what of your labor you'd like to start keeping track of. And next year, I think we'll sit down and you're going to have better results.
Well, I sure hope so. So I think what I'm going to do is I'm pretty excited to check out Veggie Compass. So I'm going to download that and see what it's about. And if I have questions, can I give you a call?
Give me a call. Be happy to help.
As I was walking around one night, I met with old Wild Bill Jones.